All right, happy Friday, everybody. I just want to give you guys an idea what it takes to be profitable in the market, what it takes to have first of all technical analysis, your edge, then the psychology of a profitable trader or a good trader in itself. First, we need to understand technical analysis. We need to understand the charts, supply and demand, support and resistance, whatever level you like trading, whatever confluence you like using. Now in there, we then find edge in the market, where it's pre-market zones like these that I have here, whether it's supply and demand zones like this in here, key areas, or simple support and resistance where buyers stepped in or sellers stepped in the market, looking to take it long or short. As you can see in these zones, we find a lot of volume, then big moves after them, like this key area. We made a nice wedge, we supported a little bit, and then we flushed down underneath it. Same thing with this one, and then soon demand in here. So now once you find these zones, your technical analysis is good. Now you have to manage your risk to reward. I always recommend a 2.5 and above, and even upwards. Once you get even better, you start to understand book maps, you start to understand volume. Whatever your confluences are, you start to look for bigger profits in the market. You don't just scalp. In my opinion, scalping, or every time you take a trade, you put more risk on the table every time you get into a trade. So if you're taking in total 10 trades on the day, you're putting risk on the table 10 times. If you're looking for just one big move in the market, maybe two big moves, you're putting risk on only twice in the market. And again, you're looking for bigger moves. That's where the money lays. You can take 1 to 3 points on ES. You can take 10 to 20 points on NQ. Every time you press that buy button or that sell button to get short, you're putting risk on the table. In my opinion, it's better to just let it run out, like you can see in these screens over here, where the movement happens all day long. You look to get short somewhere in here. If we were in a bull market and we start coming back, you look to get long and not only scalp it to, like for example, this area over here. If we start to see any sort of actual buying, you look to take this maybe back to this key area or even higher if we start to have some good buying in on the tape. Now, the longer you hold these trades, obviously the more of a chance of a reversal. But if you're truly calling key zone to key zone in the market, I believe they will almost always hit unless we're in an inside range day. Those days we have to understand to trade differently. We have to start to take a little more scalps, a little less points. In total, I would suggest a little less risk always, and we just take those small days. When big days like this come up, we can capitalize on the full move and make the real money with putting least amount of risk as possible. That's what trading is about. Best risk to reward as possible, least amount of risk. And this comes in with your technical analysis skills and trading in your edge in the market. Every single time I trade out my edge, sometimes yes, it might work, but most of the time it doesn't, or I get stopped out, especially being that my risk is always very minimal. What tends to happen when you trade like this is death by 1,000 cuts. A $100 loss here, a $200 loss there, it all adds up. Every so often in the market, like these past 2 days, I've actually taken 2 pretty good losses, which is very rare for me. I usually only take a couple losses a month. But we need to understand where we are wrong. For me, I personally did not follow my plans. I made perfect pre-market plans off these levels yesterday and today, but my mentality was not there. I was trying to force a reversal in the market yesterday, and then when this reversal came, I was thinking it was a fake out. I wasn't getting in my key zones. I just watched them fall right through my key zones when I should have just traded like a robot and I would have made insane profits. Me personally, to the past 2 days, my mentality was not right. My edge has always been there. My technical analysis is great. Just the past 2 days, the mentality has not been right. I've been trying to trade live and it has not been working for me. So full transparency on that. That's why I wanted to make this video. Trade in your edge. I always trade in my edge. I make very, very good profits. Today I've taken one of the biggest losses that I've taken in a very, very long time. It still does not outweigh my winners, so it's okay. But it's the fact that I did it live today really has messed with my emotions the past 2 days of trading. Now, since it's a Friday, I'm going to take the weekend to recover this, recover my mentality, and make all that money back Monday and then some, hopefully. So like I said, to start it off, we need to learn technical analysis, whether it's supply and demand, if you're just trading price action, Fibonacci's, fair value gaps, you need to get your technical analysis down. In there, you will find your edge in the market, where there's a lot of volume, where there's key reversal points, news. In my master course, I show supply and demand, how I get my key zones, everything I personally know and everything I personally use. As I start to learn new things, for example, like book maps, I put it in the course so everything I know and I learn as trading, you guys learn and know. In my intraday commentary, I put numbers down that we see in the market where there are big buying, big selling, weird orders, stuff that catches my eye. That's what initiated a great short for me today. Unfortunately, I got stopped out by 1 tick, which was break even. If I would have let the trade ride, we would be sitting at 70 points profit right now in ES. Like I said, my mentality today was not right. I saw perfect sell orders. I saw a perfect reason to sell, weird orders on the tape, passive sellers on the tape eating away at the buyers. Everything for me to get in a trade, and that was good for me, but I stopped out way too early. I stopped out at break even because I was nervous of the trade reversing on me because of my losses of yesterday. I brought yesterday's losses into my mentality today, and that struck me for a break even trade on that instead of a 70 point possible profit. I always want to be fully transparent with everyone. I want everyone to understand that it's not always winning, not always the best. A lot of people don't like showing their losers, but I don't mind that. It's a part of the game. If you're going to think you're always going to be winning as a trader, you're going to really get in your head. Every time you lose, you're going to think you're not going to make it anymore. You can't do it. Trading is not for you. It is not a sprint. It is a marathon. The little losses will always get outweighed by the bigger wins. Like I said, trading big markets like this, trading big moves, the chances of winning are a lot greater. As long as you put the right risk on the table, when you have edge in the market, chances are you're going to be profitable. So if you like the video or anything what I said, give me a nice thumbs up on this video. Subscribe if you're not subscribed already. Down below will be all my courses, my shop, my Discord, everything like that. Come join us, come trade with us. You get my pre-market plans every single day, my intraday thoughts, where I spot buying, selling on the tape, unusual orders, stuff that you can only see in real time. You cannot see this stuff through a volume bar. You cannot see this stuff sometimes through even price action itself. It has to be through the times and sales and orders being fulfilled in that moment. Now for this, also I use book maps. You can always check out book maps for free on Thinkorswim, or you can buy the actual book maps itself. I have a quick little video on YouTube on how to use book maps, and then I have a full breakdown in my course, how I personally use it, what to look for, and all the stuff like that.